Hey, so welcome back to my channel. Today we're going to dive into the question I get asked all the time, and that is, how much do I need to make in order to qualify for this house? Or maybe that one? Or how about this one? In a market with the highest interest rates we've seen in a long time, record high home prices, and changing guidelines in terms of mortgages, that is probably the biggest question people ask is, what do you need to make in order to qualify for this house? Whether it's your dream home or your first home, today we're going to uncover the details and go over more about what it takes to qualify. Let's get started. Okay, before we begin, I just wanted to start by saying, when thinking about qualifying for a mortgage, there are a lot more factors that come into play than just your income. So it's very important to talk to a mortgage professional, an experienced loan officer, to get professional advice on what you can afford and what you can't. But that being said, we're going to break down the qualification process, what goes into qualifying, and everything about what it's going to take for you to get in your dream home today, step by step. Before we begin, it's important to understand that determining what you can afford has a lot of important factors. So, when we're taking a look at your debts, when we qualify you as a loan officer, we're looking at the minimum monthly payments required. For example, if you have a credit card, let's say the balance is $2,000. There's a minimum monthly payment required on your credit card statement. Maybe it's 50 bucks, maybe it's $100. It's usually less than you're actually going to pay. That is the actual payment we're going to use when we're looking at your qualification. This is also something you want to consider, because if you like to pay more or you want to pay your credit cards off in full, you want to take that into account when you're setting up your home budget. The second thing I want to talk about is student loans. Student loans are a little bit different in the mortgage world. Depending on what type of loan you're looking at, what you pay and what we have to use to qualify you can be different. For example, on an FHA loan, no matter what you pay, let's say you're on an income-based repayment plan and your payment is $100 a month. We're going to have to use 0.5% of the total balance of your student loan. So if you have $50,000 worth of a student loan, guess what? We're going to have to use $250 for your monthly payment to qualify you, even though that's more than what you actually pay. So this is important to also take into account, because and why I always recommend talking to a professional, because what you can qualify for and what you think you can qualify for can often be different. Now, the majority of the time, if you have a great budget, you've taken care of your finances, you're actually going to qualify for more than you would want to. But this isn't always the case for people like lawyers, doctors, and people with heavy student loan debt that just got out of college. Now, when you're buying a house, there are also other expenses we don't often think about. And the first few, maybe a little bit more obvious. So that's going to be property taxes, your homeowner's insurance, and any homeowners association or applicable dues, special assessments, things like that. So those things are required, and most of the time, unless you're putting at least 20% down, those are actually going to be escrowed, or they're going to be built into your mortgage payment. Every month when you make that payment, your mortgage company is going to take a little bit aside and put it in an account. Then every year when your property taxes come due, or your homeowners association, or excuse me, your homeowners insurance becomes due, they're going to pay it on your behalf. It's called an escrow account, and we'll do that for you. But there are also some expenses that you want to consider that most people don't talk to you about. If you've been renting and you're a first-time home buyer, some things that you want to think about are maintenance. That's a very real expense, because something you haven't had to do. So if your washer and dryer break, guess what? You've got to buy a new one. If there's a water leak in your toilet, guess what? You've got to fix that. So you want to make sure you built in an expense factor for home maintenance. And that can be really based on the age of the property, and we can help you determine what that would look like. The other thing I always tell clients to budget for are changes. And this is something that often people don't think about as well. But the once you move into a brand new house, let's say you just moved in, you bought it, you closed, you're super excited. As you live there for a week or a month, or maybe a couple of months, things are going to come up that you want to change. Could be something simple like paint color, but it also could be flooring type. Maybe you want to knock down a wall. Maybe you want to change the way your kitchen is configured. There are changes that you want to make, and you want to make sure to build that into your budget when you're thinking about your expenses and owning a home, all the things that go into it. Now, one key thing that I always remind homeowners, just like we just talked about, not only are there different expenses, but keep in mind that your rent is locked into a lease and your rent amount won't change. It doesn't change and it can't change. And your mortgage payment or your home expenses, they can change. Let me explain. So if you've locked in a 30-year fixed rate mortgage, the actual piece of the mortgage payment can't change. Legally, it's not allowed. But the things that can change are your homeowner's insurance. Maybe that carrier had a lot of claims that year, and so their premiums are going to go up. Your property taxes. Maybe your property gets reassessed because the value has gone up. Guess what? Taxes go up. So these expenses can also change. And it's one thing you have to think about when you're buying a home and considering buying a home. You want to budget for those. You don't ever want to hit to the top of your budget and that's where you buy. You want to make sure you have some wiggle room because expenses can change and things change over time. Okay, now we're going to talk about your credit worthiness. As a lender, we're going to take a look at not just the credit score, but also what is on your actual credit report. And this is something extremely important to watch. The best place that I always suggest clients to go is myfico.com. And the reason for that is they actually have a mortgage score calculator. So probably one of the biggest frustrations that I see clients go through is the fact that your credit card tells you your credit score is at 705, and when I pull it, it's at a 660. And the biggest reason for that differential is because there are a lot of different types of credit scores out there. It's the reason why your credit card has one score. You can go buy a car, they have a different score, and then you apply for a mortgage, and it's a completely different score than any of those two. It can change just how they weight different things on that credit report. But we also look at the entire credit history picture. So we're looking at things like payment history. Have you had loans? Is it just credit cards? Do you only have one thing reporting? How long have you had credit? All of these things are going to go into account when we're looking at your credit worthiness and what mortgage you're going to qualify for. Now, there are different loan types that can go a little bit lower on the credit score and have a little bit more flexible guidelines. In fact, last week, I put up a video about FHA loans and the flexibility of their guidelines. So that is one loan that does allow you to go to a 580 in most cases. So it's a little bit more flexible. But it's also important to understand that the higher your credit score, the better the interest rate becomes. Therefore, the lower your monthly payment is going to be. Not only that, but on conventional loans, your private mortgage insurance, so that is something that's on your loan if you put less than 20% down, becomes lower if you have a higher credit score as well. So you are rewarded for having a higher credit score. You also can be rewarded in private mortgage insurance if you have more than one borrower on the loan. So if you're buying a house with your spouse and you both have great credit, guess what? You're going to get a better rate on your private mortgage insurance than a single borrower with a similar credit score, just because it's all based around risk. Now, when we're looking at this total picture, one thing that we do in the loan world is we're going to run this through what's called an automated underwriting system. And I've talked about this several times. And what this does is this doesn't just look at the credit score. It's actually going to go through your entire credit report, your debt ratios, and all the factors that go into a mortgage. And it's going to let us know, hey, the risk is good on this one. We like it. Or this one's got a little bit too high of risk. We've got to work on it. We want to see some other things on this loan in order to get it approved. Okay, so the next piece. So we've taken a look at your income. We've taken a look at your expenses. We've taken a look at your debt and your credit report. Now the next piece is going to be looking at the mortgage payment itself. And let me throw in a little quick note here. Do not go off the payments that are on Zillow. They're typically with 20% down and different parameters, most of the time they're pretty far off. So don't use it. There are some great mortgage calculators out there, but the best way to get an accurate payment estimate is by calling a mortgage professional, going through the pre-approval. And why I say that is because that's going to give you the most accurate rate information on rates and the loans that you qualify for. And it's going to give you the closest estimate that you can get without having a contract on a property. So outside of that, if you use a mortgage calculator, you just want to make sure there is a margin of error, because mortgage calculators are only as good as the data provided. Some of them can be good, some of them are not so accurate, but you want to make sure it takes into account the property taxes, the homeowner's insurance, any potential homeowners association dues, and also private mortgage insurance, if that's going to be on the loan that you're getting. So those are all the factors we want to make sure that are built into that mortgage payment. And that's how what we do in determining the most accurate payment estimate for you is pooling all those real figures. And it's also why maybe a call center or a big bank representative may not give you the most accurate representation. It's also important to have somebody that understands the market that you're in. Because let's say, for example, on property taxes, if I'm using property taxes of 1%, which is pretty standard in and around the Charlotte, North Carolina area, but you're looking at a house in, let's say, South Florida, I'm going to be off. Taxes in South Florida are a good bit higher than here in North Carolina. Taxes in a lot of places are a good bit higher than here in North Carolina. It's one of the benefits I love about living here. But having an experienced loan officer that understands those areas is going to be one of the most important factors. But I'm going to give you a little tip. Most of the time, you can actually look up the property taxes online. So if you go and you find that house that you're looking at, and you can Google whatever that county may be. So in Charlotte, North Carolina, we're in Mecklenburg County. So I can Google Mecklenburg County property taxes. When I do that, there's a property tax website, and I can look up that address and it'll pull up the actual property tax bill. Then I know exactly what the annual taxes are when I pull up the most recent tax bill, and I can use that when determining and estimating my property taxes in my mortgage payment. Now, homeowners insurance, that can take a little bit more, it can be a little bit more of a challenge, but there are some good estimating tools out there in order to help you estimate that. And we typically look at the price, but it's also going to be based on, are you in a flood zone? Are you in a high incident or natural disaster area, coastline or tornado alley? Things like that are going to increase the cost of your coverage. So make sure to think about all those things while you're estimating your monthly payment and building out your budget. And we'll go ahead in the comments below. I'm going to share my favorite mortgage calculator with you so you have the ability to estimate your monthly payment and be as accurate as possible. As we wrap up, I just want to re-emphasize how crucial it is to make sure that this monthly payment is comfortable for you. The reality is you have to make this payment. And if you're going to be in this house a long time, you're going to have to make this payment for a long time. So you want to make sure it's comfortable for you, but also you've built in that buffer for those things like maintenance, for those things like increasing homeowners insurance or taxes. Those things can happen, and we want to make sure you're prepared for it. In addition to that, we want to make sure you keep some money in the bank for the emergency fund when things happen. So make sure you take into all these things into account while you're trying to figure out what you can afford and what makes the most sense for you, determining your mortgage budget. So how much can you afford? Ultimately, it comes down to making sure your monthly payment is going to be comfortable for you. Remember, you have to pay it and we don't. We want to make sure it fits into your budget. It's not just about what you qualify for and what income it takes to get to this house. Now, if you've gotten a lot out of this video, if you've liked it, please make sure you hit that thumbs up button, subscribe to our channel for more information about mortgages, real estate investing, and everything in between. I hope you have a great one, and thank you so much for watching.